Hey traders, David Frost, LazyGapTrader.com. In this video, we're talking about day trading. More specifically, we're talking about gap trading and how gap trading is by far the single most consistent and profitable day trading strategy you're going to find across the markets today. In this video, I'm going to show you an example of a morning gap trade today that produced not one, but two trades off of one stock given out to members at 9 o'clock in the morning, 30 minutes before the market even opened for trading. You see the chart on the screen. We're going to get to that in a minute, but first, what I want to do is explain exactly what we're doing here. We're trading the morning gaps. When stocks are gapping higher or lower at the open, it creates an opportunity for traders. And the opportunity is when traders can identify a specific price where these stocks will first be drawn to like a magnet and then have a price reaction from in the other direction. So what I do is teach a course where traders learn everything they need to know in order to trade the gaps successfully. What criteria are we using? What type of stocks does this work the best with? What type of volume do we look for? Of course, how do you trade them? And most importantly, how do you calculate the specific price levels where these stocks will first be drawn to and then have that price reaction from in the other direction? Everything traders need to know in order to be successful trading the gaps is found in my course at LazyGapTrader.com. The other thing I do is give traders an opportunity to get my gap trade sent to them first thing in the morning at 9 o'clock a.m. Eastern Standard Time, 30 minutes before the markets even opened for business. Here's the email that went out to subscribers at 9:05. It came to the inbox, and this morning we identified 7 potential gap trades on the board today. Now we're getting into the holiday season, so the amount of stocks gapping higher or lower between now and New Year's is going to diminish, and this morning we didn't have a great selection. However, we did have some, and the one that hit its level out of this list today was Red Hat, but it produced 2 trades, and I'm going to show you those trades when we go back to the charts. Red Hat, RHT, I say gap lower. Support levels are $122.79, $121.05, and then $119.41. These are separate and apart, independent trades from one another. Stop and profit target is about 50 to 95 cents. None of the other stocks on the board hit their price levels. We only want to take trades that have the highest probability of success. If a stock does not hit the specific price that we calculate, we don't want it. It's off the board. It becomes a no trade. We only want the highest probability trades we can find. Back on the chart of Red Hat, let's explain exactly what happened. Yesterday, the stock closed at $128.86. This morning, the stock was getting a nice healthy haircut, trading down at the open, and you can see here what happened. The first level it came right into was $122.79. In the third 5-minute candle of the day, the stock made a low of $122.62, well within the stop loss limitation, and in the next candle of the day, the fourth 5-minute candle of the day, the stock made a high of $123.81, more than $1 above the entry price given out to traders at 9 o'clock in the morning, 30 minutes before the market even opened for trading. So we got our profit, that trade is over, and then the stock came lower. And so therefore, our antenna goes up because the stock could be coming into the second level at 121.05. That represents a separate and apart trade. It's another trading opportunity. And that's exactly what happened. The stock hit 121.05, had a little bounce, but it wasn't enough. The stock continued a little bit lower, down right about where our stop loss limitation was. However, the stock immediately reversed, and you can see here that the stock made a high when it bounced of 121.74, so that satisfied our profit target scenario. The stock came in a little bit and now is trading significantly higher than that. But once the stock bounced and it gave us our profit target, the second trade was over and we got 2 trades in one stock in the first 90 minutes of the trading day. All happened before 11 a.m. Eastern Standard Time. Folks, now's the time to learn this strategy because once we get into 2018, earnings season is going to start again, and that's where the trades come fast and furious. Each and every day, we'll have a laundry list of stocks gapping higher or lower at the open as a result of their earnings announcement or some other related news event. It creates opportunity. Day traders are looking for opportunity. This is a strategy that gives opportunity to traders each and every day. If you want to learn everything you need to know in order to trade the gaps successfully, come over to lazygaptrader.com. You'll learn everything this strategy entails completely from A to Z. I'm David Frost, Lazy Gap Trader. Thanks for tuning in.